The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. And today, we're going to talk a little bit about marijuana. Let me get my screen together. Wait on the slow computer. I need to stop talking badly about my computer. This 2012 Mac is just doing yeoman's work. Get a Mac, y'all. Alright. This is my third Mac. The only thing that ever killed it was when every time Apple changed the processor. I got a G3 back when it was Motorola. Alright. Okay, so a G3 and then a G4, they changed something about like the processor for that, and now I got this. So yeah, get a Mac. Let's see. Here we go. Aurora Cannabis is one of the pot stocks. We talked about it on this channel a couple of weeks ago, and it's had a nice run, and we'll get to the charts, but I want to talk a little bit about why it has been downgraded because they're losing money. They have like a tremendous amount of debt, and the forecast on the fundamental side, the fundamental camp, they don't believe that the company will become profitable on time or soon enough to warrant the price that it has reached. So the point of this is to give an example why I'm a pure technical trader, because stocks don't move in a rational way that we think. If people think if the stock is popular and people buy it, that'll make it go up. It doesn't have to make sense. So being a technical trader frees you from that. Okay, so this particular article is in Barron's. The link is in below the article, and there's another article link below it which talks about earnings, EBITDA, which I'll get to in this article. It says Aurora Cannabis stock has tripled since the Canadian pot producer reported better than expected March quarter sales, but it is tumbling today, and that this was the 22nd when this came out, so that would be Friday. Jefferies analyst Owen Bennett says in a Friday note that Aurora stock has become one of the most expensive Canadian cannabis stocks while still being faced with big challenges. So Bennett downgraded Aurora shares to underperform from a whole. Underperform is like you rarely see a sell rating. So underperform is pretty bad. It says they're worth no more than $10. So we'll keep that $10 figure in mind when we go look at the chart. We think near-term sales headwinds aren't fully appreciated. We see give back in the price over the next few quarters. Also, the company, they're going to issue more stocks. So companies sell stocks or offer stocks to us to buy as a way for them to raise money, and that dilutes the value of the shares people own. I don't think that's going to stop any of it, but this is going to be something good to watch to see how the fundamentals versus the technicals play out, because there's also a law of supply and demand at play even when it comes to the stocks themselves. If the demand is great enough, it won't matter about new shares being issued by the company. If the demand is great enough, the appetite for the public to have these stocks will just gobble them up, no problem. So we'll see how this works. Let's see. Oh, yeah, and also the company has this. I don't think they have a CEO right now. The founder resigned. Okay, so they're leaderless. Okay, they recently purchased a CBD, an American CBD company. I think it's called Relive, and so that that caused a lot of optimism in the stock. Okay, and the valuation of the company is 1.65 billion. That's pretty steep. So that figure is being questioned if the company really is going to be able to make that kind of money based on what the stock values. The stock is priced. It would have to turn around this negative cash flow rate that they have right now. Okay, it's saying Aurora's enterprise value is now more than 7 times the sales that Jefferies predicts for the next 12 months. That makes it the third most expensive Canadian pot stock after Canopy Growth and Kronos, with each go for about 9 times forward sales. Okay, those other firms have strong balance sheets and the backing of large consumer packaged goods. The alcoholic beverage leader Constellation Brands is Canopy's big shareholder, while Kronos has tobacco giant Altria, okay, at its back. Aurora struggles under debt and has had to mothball ambitious construction projects. Yeah, so this is going to be a good study, and even when the numbers don't add up, even let's just say theoretically this company is garbage, the price will still rise, because if a stock is in a hot sector, it will rise. The saying in the industry is the tide raises all boats in its industry or sector. That, that's the part people leave off. Okay, but I guess that's implied that you couldn't have a tide if the tide would be in that sector or industry. So that's the point, that the whole space will rise, even the dogs. And when the macroeconomics change and become hostile to that sector and industry, all the stocks will sink, even the good performing ones with good balance sheets and good management. So that's why I don't buy individual stocks. It's better to take the time to pick winning industries and sectors. For me, this is just my opinion. Let's see. Okay, he's also unimpressed with Aurora's deal to buy the U.S. CBD seller Reliva. Aurora shares surged on the announcement, but he estimates that the company is paying 8.5 times Reliva's trailing 12-month sales, saying they overpaid for it, basically, including potential earn-out payments. By comparison, the stock of CBD dealer Charlotte's Web trades for 5.3 times. Let me get to the end of this. Aurora's debt covenants require it to deliver positive EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization. There's a link below this article that I'm reading right here, which explains about that and why this is a questionable practice. It's like a little creative, okay? It's interpreting the balance sheet in a way that I guess steers you to a certain conclusion, and not necessarily an objective one, but it's common. But this is another reason why I'm not a fundamental trader, because it sounds like that's the logical, rational camp, but I say the technical side is the logical, rational camp. Special claims that Aurora can avoid diluted stock sales. This is what I'm talking about. Diluted stock sales. This is the company offering more shares, given the Canadian $500 million in debt already on its balance sheet. Okay, give you an average price on. Yeah, so that's the deal with that. Now let's get down to some charts. Okay, so this is the article. That's in the bottom too. Okay, let's start with the ETF. There's an ETF in that space called MJ, marijuana. You should be able to, remember it. It's Alternative Harvest ETF. So ETF stands for Exchange Traded Funds. It's a basket of stocks. So when you buy this particular ETF, you're buying a whole lot of marijuana CBD companies, okay, just in one symbol, all in one. So you would get all of them that I'm talking about. All the big names are covered, are held by this ETF. So for me, this is the way I would do it. And this is, the price broke a long descending trend line that started in March of 2019. Okay. To my eye, I think we're going to come up and approach this area here, and then we could get a pullback. So the big test will be if this low will hold. When that happens, I believe it will. But, it's not, this would be an aggressive buy point. I'm in favor of waiting, to get a better price, better entry. But this is looking good. We'll see how after this week we'll have a little bit more clarity about maybe we'll get that pullback. Let's see what else we got. Let's go with Aurora, since that's the one we're talking about mostly. Let's get. See, you got it's a Toronto Canadian company. I'm gonna pick the hour prices. New York Stock Exchange. Okay. And you can see that this thing broke the trend line. Again, big volume, so big exuberant purchases, okay? It hasn't had that degree or quantity of purchases in the duration of this entire decline, which is 13 months ago, okay? So I think this also could go a little higher, before we get a pullback. I mean, somewhere, I think I had it when I did my study. I think I have somewhere around $38 right up in here, and so this will be interesting to see if we get that push up. I think we will, but then after that, we should get a pullback also on this. But this is worth keeping an eye on too. So yeah, we could get a push. Let's see what else we got. CGC, Canopy growth. Okay, I'm doing the most basic chart analysis for you guys here. I go into deeper interpretation on my Patreon account, more than me interpreting it. I teach you how to do it. Okay, I'm in continuous discussion with the people in the Patreon group, and they're learning the tools, the techniques of technical analysis, so they can make these interpretations on their own. Okay, here's Canopy growth. Again, I think we're gonna get a push, maybe attack this area, and then we can have a decline. We'll see how that goes. And everything is predicated on staying above this level, which I think it will. But we'll see. But I'm not. This is all of these so far qualify as watch list candidates right now. And I think I'd rather be a little more certain that this bottom is in. So I needed to get up to this area and come down and prove to me that that the bottom is in. So everything so far has been a watch list candidate. I think there's one more. Let me see. This is, I've got my little portfolio over here. I talked about Aurora, Canopy. Oh, this is the one. This one I might have a different opinion of. This is the penny stock of marijuana, HEXO. I like this. I like these price levels. So we also broke the trend line there. We got a big volume spike here too. There's nothing, no volume. I'm looking at the height of the green bar. There's no enthusiasm, if you will, reaching this level during the entire downtrend. Okay, so the price is reversing direction. This one, this is for entertainment purposes. This one, I'll give a thumbs up to get in this one now. This I would say is a like now. Okay. And so we're talking about something that right now is 63 cents. If it goes back up to its peak, well, I think it will. I think it will exceed this peak. But let's just be conservative and say, just to revisit the former high, we're talking about $8. That's a lot of money. That's over. That's something like, I know, let's just say $6. $6.20 is 1,000%. Okay. So we're talking something like 1,300, 12 or 1,300%, something like that, to get back to this area. So give me a break, y'all. I'm doing this math off the top of my head. All right. So that's what we got. Keep your eyes open on this marijuana space. The fundamental camp, those numbers come out talking about the debt and how the profit forecast doesn't justify the value or the price of the stock, and they just talk themselves into paralysis. Whereas on the technical side, we look at it completely differently. If the uptrend is intact, we go for it. We press the buy button, and we have techniques that can help mitigate the loss if we're wrong. If you want to learn about that stuff, join me on Patreon. Peace.